In the current environment, suddenly everyone's thinking a lot more about risk, both your clients and you as advisors. But should you be, and how should you be? Joined today by Rick Bookstaber from Fabric to tell me a little more about risk. Rick, welcome. Good morning.
Yeah, thanks. Thanks for having me on.
So Rick, from your position, when we talk about risk, what should we be thinking about? Does the perception change as interest rates change?
Risk changes with interest rates, with the market, with unemployment. But the more important thing, if we're speaking about individual investors and their advisors, it's not so much the risks that we see right now. Of course, we want to monitor those risks. But if you're an individual as opposed to an institution, if you've got 10, 20 years in your horizon, what happens over the next few years, whether it's recession or something else, is almost like noise for the long term. So I think the natural place people start when they are looking at risk is to ask that sort of question: where's risk coming today?
Yeah.
A bigger issue for the individual and for their advisor is, what is the nature of the risk that really will matter to me? What's the material risks that I have to be concerned about given the time frame of my investments?
So the risk profile that you have as an individual shouldn't be altered by what's happening here and now. It should be something that really you've cultivated mentally with your advisor for some time.
Yeah. And in fact, one of the roles of an advisor, I think, is to help kind of, walk their client off the ledge during these periods of market turmoil to understand what matters and what doesn't. And this is a big difference between risk management for institutions and the risk management of an advisor with their client. My career has been, I was the chief risk officer at Morgan Stanley, at Solomon, which are banks, then major hedge funds like Bridgewater. There you worry about risk month by month. You worry about, are rates going up versus down? If you're an individual, the part of the role of the advisor is kind of redirect you away from those concerns into the things that matter given your objectives and your time frame.
How hard is that for advisors to do, to keep them focused on the long view when everything is telling people that all this noise is something they got to worry about right now?
Well, that's right. And they see this all the time because what CNBC, and pick any news outlet, any media outlet, they're always focused on the here and now.
Right.
And part of the point is to try to move away from that, to look at the longer term. It's a difficult problem because, first of all, what's happening long term is harder to pin down. I mean, if you have a hard time figuring out what may be going on over the next 6 to 9 months, imagine what the challenge is to look at what might be going on over 10 or 20 years. But that's the problem really that the advisor faces when they're working with a client.
So what's your best advice then? What's one thing advisors can do to keep their clients focused on the long view so that they don't get distracted by everything else that's going on?
It's a matter of rehearsing ahead of time things that might occur. So if I were an advisor and I'm in an environment like this, I say, look, we might have a recession. And it might be, quote, a hard landing recession. And if that happens, even though the market's down 15% or so now, it could be down 30%. But here's the way recessions go. They go down, and I can show you over and over again, in 1 or 2 years, it's back where it is. So just so you know, that's what might happen. And then in the event, it's like, I've seen this movie already. So that the client, it's a little bit like if you're in the military and you train for a mission, you ask the soldiers when it's all done, they say it's just like training. And so this is where you want to be as an advisor with your client, where they say, yeah, what happened is just like what I thought, I can sit tight. And this is where individuals have an advantage. If you're a hedge fund or a bank, you do have to worry and react month by month as these things occur. If you're an individual with a long time frame, you can stand back and let the movie run and not have to take any action.
Let the movie run. Education is key.
Yeah.
Practice what you preach and preach what you practice.
Yes.
Rick, amazing stuff. Thank you so much for walking us through risk here.
Well, it's great to be here. Thanks.
For Edge TV, I'm Matt Ackerman.